Hello, this is Steve Sanangelo from the SRS Rock Report with the new YouTube update. Get ready for silver supply shortages and much higher prices. And I'm basing this on surging silver production costs and massive future silver investment demand. This isn't something that's going to happen overnight, but we're already seeing now with the energy problems and the war in Ukraine and Russia, it's speeding up the process of what I call the energy cliff. Now, before I get into it, I just want to share that Cloud Hard Assets that we sponsor at the SRS Rock Report, they got some of the lowest costs for precious metals, and you could get Krugerrands at the lowest costs compared to many of the competitors. So if you want to check them out, they do excellent service as well. Now, this is what I've been talking about for quite a while. When I started doing my energy analysis, a lot of people ignored it, but now we see that energy prices and shortages now are on the front burner, no longer on the back burner. Now they're right in front of us, and they're just going to get worse. And I've been talking about the energy cliff, and basically this chart, there's no X and Y axis. It's a graphic representation on how using debt has increased the production. This is the oil production, which oil is the key energy source in the world. Everything, all natural gas and coal production is increased due to oil, petroleum. And so what we've done by adding debt, we have increased the amount of production. And then what happens is we have more of a cliff-like decline. So we have brought a lot of production forward from the future right here that was supposed to be in the future. We have brought it forward, and now this is what we're facing. And unfortunately, a lot of the market does not realize that. And I've been also talking about this. Europe is having a lot of difficulties now, especially with the Russian-Ukraine war, because Europe gets 75% of its natural gas from Russia in pipelines. And if we look here, Europe is the most dependent on natural gas imports. This is billion cubic feet a day. Asia, as a region continent, is second at 20. And most of this surplus really comes from Russia and the CIS states. So the energy situation, the energy dynamics are really starting to hit the world now. And that's the reason why it's important to be in precious metals. Now, I wanted to start off with this. This is Monex. This is the Gold Eagle premiums, but they're very low. If you look at a lot of the online dealers, their premiums, percentages, and prices are much higher. But I just wanted to use it as a gauge. If you look at the Gold Eagle premium for the 1 ounce coin, it shows it's back up to about the average, which is about 4 to 5%. So right now it's about 4.75%, but for most dealers, it's 6-7%. But we could see, even though that the prices or the premiums are going back up, it's still about the average over the past 10 years. What's different is the Silver Eagle premiums. According to Monex, theirs is about 34%, and the average for the last 10 years is about 15%. But if you look at many of the online dealers, this is the top online dealers. You can go to their websites. It's about $15. That's a 60% premium if you go by $25 silver. And again, Cloud Hard Assets has the lowest premium above spot, but still, this is crazy to see these Silver Eagle premiums at $15, 50 to 60% over spot. Now, this is the updated American Eagle sales. What we're seeing is a lot of gold buying. And when you have times of war, investors move into more gold. And I think the problem is it's hard to get the silver. Now, we have 426,500 ounces as of the end of March for Gold Eagle sales. And we have 7.5, maybe 7.6 million Silver Eagles. Now, this is much lower. If we look at the same period last year, Gold Eagles are more, especially in March. You go back here, we have 155,500, but It was only 66,000. And that's due to the war, people wanting to buy gold. So the interesting thing last year, we had 12 million sales of Silver Eagles in the first 3 months. Again, for whatever reason, if we go back here, and there's still a backup of getting Silver Eagles. So I don't know if it's an issue for the mint to get the silver rounds, but there's still backups to get Silver Eagles. That's why the premiums are so high. Now, I wanted to show you this because while a lot of people don't want to get into the ETFs, they believe they're fraudulent, except if you get into the Sprott PSLV or the PY, the physical Sprott Gold. The institutions that control 80% of the market, this is where they go. They go into the ETFs. And what we could see in the last 4 weeks, a huge increase, almost 5% movement of institutional investors and smaller investors into the gold ETFs. Now, this isn't the full chart. It's very long, but this is the majority of the movement. So we see about 6.8 million ounces moved into the gold ETFs, almost 5% in the last month. Now, compare that to the silver ETFs. We've actually have 7 million ounces, and most of that was from Deutsche Bank. And I'm going to talk about that. We had 10 million move into the iShares SLV. We had 4 million move into Sprott. But net, because we had such a large outflow from Deutsche Bank, and I actually contacted Metals Focus, Philip Newman, who does the silver, and I asked him what he thought was going on. And if we look at this next chart right here, we see this is Deutsche Bank. This was on the 25th of March. They had a 14 million ounce. That's a withdrawal. Now you could say, well, how can they loot? How can they take out 14 million ounces in one day? Well, it stays in the vaults. It's an accounting thing. And what Metals Focus believes has happened, and it makes sense, is that because Germany is in such dire straits, someone had to sell silver. And they saw it also in one of the gold ETFs. Well, a large firm got out of silver because of issues elsewhere. And so I think we're going to continue to see, if we go back, I think we're going to continue to see a lot more institutional investors move into silver and gold, especially as these energy dynamics continue to play out. Now, I put out this for the gold members at the SRS Rock Report. I put out a lot of content and the unbelievable high cost to produce silver. It's important to understand what's happening now because it no longer takes $15 to produce silver. The price of silver has really gone up. And that to me is the floor price now in silver. And so why is that? Well, the top 8 silver mining companies mines an average silver yield are very low. It's up a little bit compared to 2020, but this is the reason why we see the falling ore grades. It just takes a lot more ore to produce silver, and the energy price has gone up. And if we go back 500 years, we could see that back Fresnillo mine was producing silver at 40 ounces a ton. And in 2008, it was 12.1. And the Cannington mine, which is in Australia, was 15.3 ounces a ton. This is what they did in 2020. Fresnillo was down to 5.6 and the Cannington mine was down to 4.1. So especially in Mexico, we could see a huge decline in silver ore grades. And it just costs a lot more now to produce silver. So if we look at this chart, this is the West Texas Intermediate crude oil price, and that's in the black line. And the silver price is in the blue-purple area. Now, if we go back from 92 to about 2004, it was a little bit higher here, but this was about the cost of production. $4 or $5, maybe a little bit higher. And that's the reason why the price tend to fluctuate off that. But then we see the oil price take off. And then in this period, it moved up to about $10. And we had the price of silver fall. It came down right to where it cost to produce it. Then as the oil price shot up, now this is the trend line here for this period, about $15. Well, the price of oil has gone back up and the cost of production has gone up even more. And I provide that data for the silver gold members at the SRS Rock Report. So the price to produce silver now is much higher than 15. And now that's going to be the floor for the silver price. And if we look at some very interesting factors that are taking place, this is the top silver miners' weighted average cost of goods compared to what their revenues were. So if we take their cost of goods to produce the silver and divide it by the revenues in 2020 versus 2021 and the fourth quarter of 2021, we could see in 2020, there's 68.6%. That's what the total cost of goods were. And in 2021, when oil prices moved up, energy prices moved up, it was 71.7. And in the last quarter of 2021, the fourth quarter, 75.3. So even though the silver price and the metals prices are going up because some of these miners are producing base metals and gold, their cost of production is going higher. Can you imagine the first quarter of 2022? It's going to be even higher than this. I believe it's going to be even higher than this because the price of oil in the first quarter of 2022 is like $95. And so this is another factor we need to look at. And I also wanted to show you, I'm going to do an update for the SRS Rock Report subscribers. We hear that, well, that's just primary silver, Steve. There's a lot of base metal mining of silver. They do it very cheaply. No, that was the good old days. And this is KGHM Paleska, which is the largest silver byproduct producer, and it's in Poland. And they produced 44 million ounces of silver from their copper mine in Poland. Now, what I wanted to show you, I go by the operating margin, and this isn't all their costs. Back in 2011 and 12, when silver prices were higher, but especially copper prices, look at their operating margins, 35%, 46%, 34%. But look what they're at now, 13% in 2020, 16% in 21, and look what it is in December 2021, the last quarter, 10%. So even though it had higher operating margins here, look what it's at now, it's 10%. So even though KGM Paleska is producing a lot of byproduct silver from its copper mine, 45 million ounces a year, the energy costs in Europe have gone up so much. And this was as of the fourth quarter. Could you imagine what the energy costs now in the first quarter? So even the base metal miners, the cost to get their silver to the market has gone up as well. So it's not just the primary, it's also the base metal miners. And I just wanted to show you this. I believe Bitcoin is a great speculation if you're savvy at trading Bitcoin. But Bitcoin to me is not a long-term store of value, but rather it's a speculation and it's based on the trend of tech stocks and the NASDAQ. The NASDAQ is in purple and Bitcoin is in red. So we see Bitcoin bottomed in the beginning of March, and then we had the big move up in the NASDAQ, and so we had the big move up in Bitcoin. So I believe the energy cliff is going to be very bad for high technology and the NASDAQ. And so it's also going to negatively impact Bitcoin. So I do not believe Bitcoin is a good mid to long-term store of value. Now, towards the end of this presentation, I want to talk about introduction, turning assets into liabilities. This was for gold members. Why gold and silver will protect investors when energy cliff destroys most financial assets in real estate. It's very important to understand this. And I believe we're going to start seeing this in the next few years. So I did this report for the SRS Rock Report subscribers. And in that report, I showed this. This is a study, a poll on Americans' precious metal holding. 84% said they didn't own either. But that doesn't mean that 16% do. Own both gold and silver, 6.5%. I own some silver, no gold, 5.1. I own some gold and no silver, 4.3. So it's really, it's some gold and silver but it's not much. It's really only 1 or 2% of the market owns silver and gold. And even if they do own some, it's very little. They're only less than 1% own a significant amount of precious metals. Now, this is the institutional investment managers. This is what they're investing in. And again, I've said that the institutions control 80% of where the funds go. So where institutions go, that's where the price movement is. And that's where institutions have moved into gold and silver in the last 15 years into the ETFs. That's when we've seen the big price moves. But this is in 2021, fixed income, that's bonds, corporate bonds, treasuries, foreign bonds. That's almost 40%. Equities, 36%. So this is paper assets. This is financials, which are going to get into big trouble as we hit the energy cliff. 76%, but 16.7 are in alternatives. But most of these alternatives aren't precious metals. Among those who own them, alternatives allocations appeared to be the Swiss Army knife in 2021. The hunt for yield is most clearly reflected as close to half say they will increase investments in private debt. They are looking to up allocations in gold and precious metals and absolute return strategies. And still, it's not that much, and I'll show you. This is the SLV institutional ownership of the iShares SLV. 0.29. Basically, the average portfolio in the institutional portfolio only has 0.3%. That's 1/3 of 1%, less than 1/3 of 1%. That's the average portfolio. And if you look at the Sprott PSLV, it's less than that. It's 0.17. It's not even 1/5 of 1%. There's 3.3 billion of institutions in silver SLV. There's only 500 million in the PSLV, and it's a very small percentage. Now let's look at gold. Let's look at the GLD. It's more, right? It's almost 0.8%. And the IAU, which is the iShares Gold Trust, it's 0.83. And if we look at the HYS is the physical gold Sprott, it's 0.5%. So if you add all these up together, we're talking, maybe a 2% institutional ownership, average ownership, and it's not that much. So this is where we're going to see the movement in the metals as more institutions moving to gold and silver ETFs. And so with rising energy costs, falling ore grades, it's more expensive now to produce silver. And I believe with the energy cliff coming around the corner, it's going to be even higher. So as institutions and small investors move into metal, either physical or ETF, we're going to have shortages, just like we're seeing in other parts of the market. And that's why it's important to be into the metals before this happens. Well, thank you very much, and I hope you enjoyed this update.